I woke up this morning to find that somebody was going to lend Supermacro Computer $700 million because they know something I don't know, that Supermacro is going to take off again, and they just were able to secure a note, a convertible note for $7 million, and the stock price opened up about 10% higher as a result of that. I was excited. I thought this is good. I might even go forward and buy more shares if it pulls back a bit. And then I went and found the press release that Supermicro put out on Business Wire. It's a 6-page document that explained in great detail exactly what they're doing. And I thought, as I read this document the 5th time, this is like going to Las Vegas and sitting down at the poker table, and the people at the poker table saying, "Hey, welcome here, and we've just changed the game, and here are the new rules, and here's a document, 6 pages, that explains it in total detail. Let's play cards." This is Wall Street at its worst. I can't believe what I read. What they basically did was Supermacro, as I understand it, went out and put out a convertible note, that is a bond or a loan for, they don't disclose exactly what the amount was, at the 0% interest rate, but it was convertible into Supermacro's stock at predetermined prices as the note matured. Well, as the note matured, it reads to me the prices weren't met. So the issuer declared it due. And Supermacro went around and said, "Hang on, let us sweeten the pot a bit." And so what they did was go find another note this one for $700 million. It's issued at 2.5% interest, but again, with a convertible clause that they can convert it in March of 2026 for a stock price at 150% of what it is today. Okay? What if it isn't at that price? Well, then the whole thing falls apart. But then as you read into the document, they say that they are also allowing these people to use other derivatives to offset the risk that the price doesn't get to 150% of what it is today, to recover their losses. So who are they going to sell these derivatives to assure that they get their $700 million back? You and me. They're going to do it through options. They're going to do it through shorts. They're going to do it through all kinds of things. They have made this thing so damn complicated that you and I can't really understand it. So what I did was I said, I'm going to go and give this to someone who is smarter than me, who can figure this out and tell me exactly what is happening. That was called ChatGPT. I asked ChatGPT, I call her Samantha, explain this in detail to me. ChatGPT gave me the scenario that I just shared with you and broke it down into several points. And then I went back to her and I said, based on what you told me, this looks like a last-ditch effort on the part of Supermacro to cover their ass, to try to pull themselves out of the bind that they find themselves in, the financial disaster they currently find themselves in. And Samantha came back and said, that's kind of how I interpret it too. They are underwater. They have the belief that they will continue to have the ability to produce the servers that NVIDIA and Amazon and Google and Apple need, but they have no guarantee. And so they have one last ditch effort. And the person who issued the first note has no other way out. If they push forward on Supermacro and do not give them this 700, and it doesn't really say that it is the same investors. If they don't give them this 700, Super Macro is going down now. That's how I interpret it. I don't want you to take it on my word. So what I have done is I've gotten the press release that they put out that explains it in total, and I've put it into a document, and I'm going to give it to you and read it to you in the remainder of this video. Somewhere in the remainder of this video, you'll say, I've heard enough and I don't understand what I just read. Go to Business Wire, find it, upload it into Samantha, your ChatGPT or whatever you use, and see if you don't think this is a royal screwing of the public. It is a suck them in and then just tear the living crap out of them. This is sinful. I sold everything I had. I had anticipated that I was going to double down on Supermicro. I thought that the demand is there for the semiconductors. The demand is there for the servers. They've got the ability to produce the servers, but they must be so poorly run and financially managed that they managed to just kill themselves. That's how I read it. Now, I could be totally wrong, so that's why I want you to listen to the rest of this video. It's not pleasant. It's not, you're going to say, I don't understand that. Go to Business Wire, find the document, and read it, and make your own decision. This is Wall Street at its worst.
Supermicro announces private placement of $700.0 million of new 2.25% convertible senior notes due 2028 and amendments to existing 0% convertible senior notes due 2029. February 11, 2025, 4:07 p.m. Eastern Standard Time. San Jose, California, Business Wire, Supermicro Computer Incorporated, NASDAQ, SMCI, Supermicro or the company, today announced that it has entered into privately negotiated agreements with certain holders of its existing 0% convertible senior notes due 2029, the existing notes, to purchase, the subscription, $700.0 million aggregate principal amount of newly issued 2.25% convertible senior notes due 2028, the new convertible notes, and 2. To amend certain terms of, and obtain waivers with respect to, together, the amendments, the existing notes, as so amended, the amended convertible notes. The amendments are expected to be effective, and the subscription is expected to close, on or about February 20, 2025, subject to customary closing conditions. The amendments and the subscription are cross-conditional. The company intends to use the net proceeds from the new convertible notes offering for general corporate purposes, including to fund working capital for growth and business expansion. The new convertible notes. The new convertible notes will be senior, unsecured obligations of the company, and will bear interest at an annual rate of 2.25%, payable semi-annually on each January 15th and July 15th, beginning on July 15th, 2025. The conversion price for the new convertible notes will be equal to an approximate 50% premium over the volume-weighted average price of the company's common stock on February 12, 2025, the reference price. The conversion rate and conversion price will be subject to adjustment upon the occurrence of certain events. The new convertible notes will be redeemable, in whole or in part, subject to certain limitations, for cash at the company's option at any time, and from time to time, on or after March 1, 2026 and on or before the 20th scheduled trading day immediately before the maturity date, but only if the last reported sale price per share of the company's common stock exceeds 150% of the conversion price for a specified period of time. The redemption price will be equal to the principal amount of the new convertible notes to be redeemed, plus accrued and unpaid interest, if any, but excluding the redemption date. Holders of the new convertible notes will have the right to require the company to repurchase all or a portion of their new convertible notes upon the occurrence of a fundamental change, as defined in the indenture governing the new convertible notes, at a cash repurchase price of 100% of their principal amount plus any accrued and unpaid interest, if any, but excluding the applicable repurchase date. The new convertible notes will mature on July 15, 2028 unless earlier redeemed, repurchased, or converted in accordance with their terms prior to such date. prior to the close of business on the business day immediately preceding January 15, 2028, the new convertible notes will be convertible only upon the satisfaction of certain conditions and during certain periods, and on and after January 15, 2028, at any time prior to the close of business on the second scheduled trading day immediately preceding the maturity date. The new convertible notes will be convertible regardless of these conditions. The company will settle conversions of the new convertible notes by paying or delivering, as applicable, cash, shares of the company's common stock or a combination of cash and shares of the company's common stock at the company's election. The amended convertible notes. The amended convertible notes will bear interest from the effective date of the amendments at an annual rate of 3.5%, payable semi-annually on each March 1 and September 1, beginning on September 1, 2025. The conversion price of the amended convertible notes will be amended to be equal to an approximate 105% premium over the reference price. The conversion rate and conversion price will be subject to adjustment upon the occurrence of certain events. Other than corresponding changes to the amended convertible notes to reflect the revised interest rate and conversion price and conversion rate, the terms of the amended convertible notes remain substantially unchanged. In connection with the amendments, the company expects some or all of the holders of the amended convertible notes and/or the new convertible notes may enter into or unwind various derivatives with respect to the company's common stock and/or purchase or sell shares of the company's common stock concurrently with or shortly after the determination of the amended conversion price for the amended convertible notes and the determination of the conversion price for the new convertible notes. In particular, the company expects that many holders of the amended convertible notes employ, and holders of the new convertible notes will employ, a convertible arbitrage strategy with respect to the such notes and have or will establish a short position with respect to the company's common stock that they would modify or establish through purchases or sales of the company's common stock and are entering into or unwinding various derivatives with respect to the company's common stock, as the case may be, in connection with the amendments or the subscription. These transactions could cause or avoid an increase or a decrease in the market price of the company's common stock, which may also affect the trading price of the amended convertible notes or the new convertible notes at that time. In particular, this activity could affect the market price of company's common stock concurrently with the pricing of the amended convertible notes or the new convertible notes, and could therefore affect the conversion price for the amended convertible notes or the new convertible notes. In connection with the pricing of the existing convertible notes in February of 2024, the company entered into privately negotiated capped call transactions with certain financial institutions, that option counterparties. The capped call transactions cover, subject to anti-dilution adjustments substantially similar to those applicable to the existing convertible notes, the number of shares of the company's common stock underlying the existing convertible notes. As a result of the amendments, the company intends to either amend the terms of and/or terminate all or a portion of the capped call transactions. Following any such amendment or termination, the option counterparties or their respective affiliates may modify or terminate their hedge positions by entering into or unwinding various derivatives with respect to the company's common stock and/or purchasing or selling the company's common stock or other securities of the company concurrently with or shortly after such amendment or termination of the capped call transactions. This activity could also cause or avoid an increase or a decrease in the market price of the company's common stock or the amended convertible notes or the new convertible notes at that time. In particular, this activity could affect the market price of the company's common stock concurrently with the pricing of the amended convertible notes or the new convertible notes, and could therefore affect the conversion price for the amended convertible notes or the new convertible notes. Neither the amended convertible notes, the new convertible notes, nor any shares of the company's common stock issuable upon conversion of the amended convertible notes or the new convertible notes, have been registered under the Securities Act or any state securities laws, and unless so registered, may not be offered or sold in the United States absent registration or an applicable exemption from, or in a transaction not subject to, the registration requirements of the Securities Act and other applicable securities laws. This press release shall not constitute an offer to sell or a solicitation of an offer to buy the amended convertible notes, the new convertible notes, the company's common stock potentially issuable upon conversion of the amended convertible notes or the new convertible notes or any other securities, and will not constitute an offer, solicitation, or sale in any state or jurisdiction in which such an offer, solicitation or sale would be unlawful. Cautionary statement regarding forward-looking statements. This press release includes forward-looking statements within the meaning of Section 27A of the Securities Act and Section 21E of the Securities Exchange Act of 1934, as amended. Such forward-looking statements include, among other things, the anticipated terms of the amended convertible notes and the new convertible notes, statements regarding the intended use of the proceeds from the subscription and the potential impact of anticipated transactions by holders of the amended convertible notes, the new convertible notes, and the option counterparties on the company's securities. Forward-looking statements may be identified by the use of the words may, will, expect, intend and other similar